Door's closed.
Hello and welcome. I'm David Grossman. We're here at David and Gerry's Real Estate Cafe. This is my co-host, Gerry Hogenhout. How you doing, Gerry?
I'm great. How are you doing, David?
Good, good.
We're back.
Good to be back in action.
Yeah.
Did you have a good summer?
Awesome summer. How about you?
It was awesome. Spent some time up in Wasaga. I know where you have a place.
It's my cottage.
Bought a house in Wasaga, so
I heard that.
so excited to move there. You know, we don't need to be anywhere in particular for the most part in this new world that we're in now. So I've learned, if COVID has taught me one thing, it's that by and large to operate my business, I don't have to be in Toronto, which is a relief because for many years I've wanted to get out of the city. Let me tell you who we have here at the table. We are working our, we're just going to mute Felix for a moment there. Felix, he's not sure what's going on with Felix's camera, but anyhow, so we have with us Harry Stinson. We're actually at the site of the Gibson School, where the Gibson School lofts will be, and we're going to talk to Harry about things that he's up to, and the main topic for today is really the Hamilton real estate market. What Gerry and I are planning over the next few months is to visit different geographical areas and do a show with some of the local people to talk about the local real estate market. Harry's laughing. Harry.
It sounds like the Beverly Hillbillies, the local people.
It's
the quaint local people.
We're taking the show on the road, and
we had a nice tour here, and we had walked downtown.
Absolutely, on Barton Street here, and you know, even though we can't have all of our friends together in the same place, we can have them on Zoom, and we can have some of our friends here together, like you guys. So Harry Stinson and Gavin McCrodan from Huxton Black, Harry Stinson from Stinson Properties, of course, and Gavin is the Chief Investment Officer with Huxton Black, the company where I'm registered as a dealing representative. So, and we also have two great guys who are with us remotely. We have Felix Vortsman, who's on the call with us. I don't know if you can hear us there, Felix. We're going to be talking to Felix. He's a CPA and founder of Chief Millionaire Maker Cloud9 Life, also a sales representative with Rockstar Real Estate, and we will also have Mark Loeffler as well, who's a sales representative and a team leader from, well, he got cut off here. Oh, no, here he is with Keller Williams Signature. So, and of course, we have all you, our good friends, watching from at home or wherever you are. And as you know, if you've tuned in with us before, it's an interactive Zoom call. So we appreciate comments, questions. Welcome to provide feedback and questions as we go along, and we'll do our best to address your comments and questions as we go. First off, Gerry.
Yes.
September 29th, self-employed tax season. If you were able to put paying off your taxes this long, then the deadline's up. Even an N95 mask isn't going to get you past the end of September to pay your taxes if you're self-employed.
If you're self-employed. So, and also for other people, they did extend the payment to September, and then they extended it. So, yeah, we're in the filing deadline stage, so we all have to file our tax returns and pay our taxes.
Except for Mr. Trump, he doesn't.
Well, he filed one, but he only paid $750 in tax.
Well, did he pay it, though?
That's pretty good. He must have a very creative account.
So tell us what is, we always do a segment, Tax Talk.
Tax talk, yeah.
So
yeah.
what's the latest? What do
Well,
you
there's
have
been,
for us
you know,
today?
since we've been last on air, I mean, there's been a few things. I mean, one very interesting thing that's coming up is if there's realtors out there, real estate agents, legislation has been passed that they're allowed to incorporate. And that's a big thing for the real estate industry. You know, many real estate producers are paying 40, 50% tax. So they've lobbied to the government for the last 3 or 4 years. They've listened, and now, well, not now, probably within the next 3 to 4 to 5 months, real estate agents will be allowed to incorporate, which corporation tax rate in the first 500,000 is 12.5%. So if you're used to paying 30, 40, 50% in personal taxes, and we can flow that income through a corporation, there's some significant savings there. So in fact, we're doing a segment, I'll talk a little bit more when we wind up, but we're actually doing a segment specific for real estate agents. So that's one thing that's certainly, you know, important, new and you know,
That's very exciting for a lot of our viewers, I'm sure. We have a lot of real estate agents normally.
There's a lot of real estate agents out there, and it benefits probably most, not all, but I would think more 60 or 70% of the real estate agents out there would benefit by incorporating. So
Right.
I've been lobbying hard for that. So
Okay, so that's interesting. And as you said, Gerry, we're doing a Zoom call
yeah, we're going to do
around
a
the
deep
middle
dive.
of October. I think is it the 13th?
October 14th, I believe.
October
It's a Wednesday
14th.
night. We're going to do a deep dive. We're going to spend an hour and a half talking about just that topic, how it will affect real estate agents, how they benefit.
Right.
Pitfalls to look out for. So,
So-
we're going to do a deep dive.
So if you're watching this and you want to attend that, send me an email or send Gerry an email. We'll make sure you get the link for that Zoom on Wednesday, October the 14th.
Yeah. Now, just also, David, with this tax deadline, I'm curious, with the looming tax deadline upon us now, like how does that affect somebody getting a mortgage? So if somebody comes to you in June or July and the bank or the lender is looking for their 2019 tax return and CRA says you don't have to file it yet, what happens from a lender perspective? Are we allowed to draft a tax return and say this is what we're going to file, or like how?
Yeah, well, I mean, there's always that point in the year where, you know, you're kind of close to a deadline and some people have completed their tax returns and some people haven't. So from a mortgage standpoint, I basically have two things to say to people. Well, first of all, if your last year is going to help you and the numbers were good, get it done as quickly as possible. You know, I've done mortgages where the lenders have said, you know, they'll approve a mortgage, but they want to see that any taxes are paid, or at least that no taxes are owing. I've seen one lender, they did a holdback, that they wanted to hold back the money until that they saw the taxes were paid. And of course, as you know, Gerry, I work with a lot of self-employed people, with some lenders who don't ask for tax returns or notice of assessments at all, which is a very big niche market out there for self-employed people. Yeah, you know, it allows people to, if they have deductions, they don't have to worry about inflating their net income in order to impress the bank.
Right, and you know, it's great that more and more lenders, you know, are conducting business that way, because in reality, you know, they're secured to the value of the building. You know, we'll always try to make our mortgage payment.
Right.
They have security, so.
Right.
I sometimes wonder, some of these lenders, why they emphasize so much on the income side, whereas really the concentration should be on the value of the asset.
Yeah, well, there was a time, you know, probably around 10 years ago, where lenders were doing the true stated income applications and mortgages, where they didn't check at all. If you had good credit and you had some down payment, you could get a mortgage with no proof of income at all. Those days are gone, and now even the alternative, what we call the B lenders, they want to see, even if it's just T4s or business bank statements, business bank statements is the big thing.
Yeah, I remember those days when we'd print off a tax return and say, here, take this to your mortgage broker and use those numbers for your application. But those days are gone. So they want to see notice of assessments, which is proof that we filed it with CRA and that it's been assessed.
That's
but
right.
It is what it is. I mean, that's the way it is. So.
Yeah, but we do our best, as you know, Gerry, to help people out, whatever the circumstances. And this is a real estate market's been hot. So
really hot, really.
So
I mean, the cottage, interesting cottages. My God, since we've last done webinar, I've had a lot of discussions with people about the tax implications to a cottage. It's one thing to buy a cottage, but you know, it's a taxable. I mean, people need to realize they're allowed one principal residence exemption. So once you have a house and a cottage, you can use that exemption in either property, really.
Yes.
But not both.
Right.
So there's a lot of tax implications to buying cottage, but certainly that's a popular thing now. Just with COVID, people are realizing they're not going to be traveling away. So,
That's right.
Like Muskoka, prices are going crazy. Wasaga,
Yeah,
your new neck of the woods, prices are going up. So
that's right. And
cottage
people are looking for cottages, and people are spending more time there too, right? If
Yeah.
they can, if their employer allows them to work remotely, some people have spent their entire summer and months up at the cottage. So it seems to be a bit of an exodus.
Yeah, that's what we did. We actually made a little office in our cottage, so now we can work remotely from there, which is awesome. So.
Yeah. All right. So, so hot real estate market, some good tax tips. And again, October the 14th, Wednesday, contact us.
Yeah.
If you're a real estate sales representative and you want to be on that session. It's going to be great. I know you're going to learn some very good things about what you will be able to do, and if you incorporate as a realtor. Let's get to talking to Gavin to start. Let's have a word. Gavin McCrodan, Chief Investment Officer with Huxton Black, the firm that took me on with all my scars.
Happy to have you, David.
We're very happy to have you here. Talk to us about Huxton Black, you know, the services that it provides, and I know portfolio management is part of something that you do. What is that?
Yeah, maybe describe portfolio management. I think our listeners would want to.
So portfolio management differs from the traditional investment advisory role or mutual fund, you know, sales role in one key fashion, and that's because we end up with a fiduciary responsibility to our clients, just like your lawyer would have to you and your doctor would have, which means we're obligated to do not what's in our best interest as are a lot of commission salespeople, but what's in the best interest of the client in 100% of cases. So as a portfolio manager, we tend to offer discretionary investment solutions whereby we construct portfolios based on real deep due diligence with our clients to uncover things like their investment time horizon, their investment risk parameters, their goals and objectives, to really make sure that we're doing everything that we can to ultimately put them into the portfolio that makes the most sense for them. So that's sort of portfolio management in a nutshell. I had a client call today who was introduced to me by a realtor friend, and after doing some due diligence and meeting with a few other financial advisors to make sure that they felt good about their decision, they came back and said, Gavin, you set the bar so high when we met back in June, and we're thrilled to be, offered an opportunity to work with you, because another key differentiator between traditional portfolio managers and what we're doing at Huxton Black is we're not only servicing, the top 1% of, net worth, whereas in the bank channels from which, I came, as did my partners, our services were exclusively offered to households and families with $1 million of investable assets. So we've really brought that bar down to, it was an important business decision of ours when we got started to ensure that not only the top 1% of net, liquid net worth investors were treated with this fiduciary responsibility. And ultimately, another key factor of our business offering is significantly reducing the cost when compared to other channels for wealth management. So most of our clients end up with a fee structure that is a fraction of what it would be if they were left to invest in, typically high cost mutual funds, for example.
When should somebody consider using a portfolio manager? Is there a dollar level?
Yeah, good question, Gerry. And again, so our ethos included not just the top 1%, but we actually have offered our services to investors who are just getting started. Good. Because what we're doing is so digital and scalable in a lot of ways. Once we get to know our clients, our trading and our portfolio management systems and our CRM and you name it, are so scalable that it was important for us to, help not just those top 1% of investors, but ensure that the people who need it the most, whose fee sensitivity is the highest, right? You know, if you're sitting on a $5 million portfolio and you spend $50,000 a year in fees, you're not going to have any red tag days, right? Whereas if you're just getting started and, you know, 2.5% of your assets under management every year are ending up in the hands of the big banks or mutual fund manufacturers, for example, that can really have a severe long-term negative effect on your nest egg when it comes time to retire. So oftentimes we're putting together, you know, side-by-side cost comparisons, and the feedback we often get is that, you know, this sounds too good to be true.
I also like the fact that you entertain smaller, like limited partnerships. So if a group of people or investors are interested in pursuing a project of some sort, you'll package that deal up as an LP, as a limited partnership, and facilitate that.
Yeah, the corporate finance component has been a real exciting part for me coming from the big banks. And, you know, we've got a good founding team, and we've got some great additions to the team since, you know, over the last couple of years with a ton of experience in the alternative space. So, you know, the bench strength has increased to a size whereby we're comfortable facilitating the due diligence on some of these things that you never get access to with the big banks, because they're just never going to spend time on the due diligence. You know, the projects in some cases could be a $4 or $5 million raise. And again, the banks with sales forces of thousands of advisors, you can't scale that. They're not going to spend the time of day on it. So yeah, you know, the alternative space has been a lot of fun. Yeah. And we find it to be a good complement for the, you know, the core of our clients' portfolios, which is very vanilla blue chip stocks. You know, we like companies with a good track record of not just paying dividends, but increasing their dividends, globally diversified, CAD hedged where we can, just to eliminate any foreign exchange volatility unnecessarily. The alternative piece really ties in nicely with that for our clients where and when it makes sense. They're not for everybody, and especially for our smaller investors. You know, you never want to tie up somebody's $20,000 of liquid capital into something that has liquidity constraints or a longer term time horizon. But we've had some fun in the space for sure. Yeah.
So when you talk alternative space, for our listeners, you mean your exec market dealer?
That's right. So we're licensed in Ontario, BC, Alberta. We just put the ball in motion to get licensed in Quebec today as a portfolio manager and exempt market dealer. And it's the exempt market dealer space that allows us to participate on a transactional basis with these issuers of private products.
So do you have many issuers, or do you just basically make arrangements as issuers are needed?
Well, it's a little bit of both. So along with the help of Steve Kangas, who's in the audience here today, he's done a ton of due diligence. And by what quickly became apparent is, you know, as an exempt market dealer, there's no shortage of issuers who want you to push their product. Right? You know, just they'll search the Canadian Securities Administrators website, find out who's licensed, and, you know, they'll cold call you to try to get you to hawk their stuff, which is you know, from a deal flow perspective, it's nice to get, you know, have the phone ringing, and when the opportunities are great, it makes sense. But I'd say we turn down 90% of what we see. Wow. And, you know, you've really got to have your act together before we'll ever think of putting you on the shelf. So, you know, we've done some mortgage investment corps, we've done some private real estate, we've done some technology. Once upon a time, we did some cannabis. It's really, you know, we're not, oftentimes what we're looking for is stability and cash flow. So it's not often that we're doing, you know, we're funding some entrepreneur's vision who's never shown any expertise in execution.
Interesting.
Gavin, how has Huxton Black been affected by COVID? How have your investors been affected, and how has it changed the way you do business?
So I'd say I might answer those in the reverse order. So we shut the office down rather quickly. You know, everybody got set up at home to work remotely, and that's, you know, it's a shame because I still go into the office and we're spending a good buck on it on a monthly basis and it's very idle, right? You know, it's like we're coming in sort of one at a time from time to time, and it's a beautiful space. And when it's humming, the energy's fantastic. You know, now it's sort of like if I get there, maybe there's another person in the office, and sometimes I'm there all by myself for, you know, hours. So it's certainly affected the way that we interact, and we've had to be intentional about connecting with the various parts of the team, and at different times and different groups of the team we're connecting, whether it's, you know, our portfolio administrators, our partners across the country who are referring clients to us, what have you. So you know, to say, I don't know how cliche the term Zoom fatigue is, but I've been suffering from it. I think
many businesses and companies are in people.
Yeah, and, you know, my preference is to, you know, shout across the table, hey, Steve, hey, you know, Matt, what do you think about this?
Yeah.
And now it's almost like you got to schedule a phone call just to ask a 2-minute question. So there's some pros and cons. You know, the flexibility it's afforded the families who work with us has been, you know, a huge benefit, right? Because having to work from home and deal with the children, our work days have shifted in some cases, right? You know, my own as well as a number of people on the team, right? It's like, okay, so we got the kids organized, and, you know, we're going to work for these few hours, and maybe we're going to take a break and we're going to have lunch with the kids or what have you. And then maybe we're working a little bit later into the evening to catch up on some of the things that we were hoping to get done that day, for example. As far as clients' expectations, I'd say there's been very little in the form of anything missing, right? You know, we've been available, we've been communicating via different mediums that, you know, I have clients who will connect with me via text messages and emails and phone calls and Zoom chat. So I don't think that from a client service perspective, there's been any hiccups. For being a pretty digital shop, you know, clients can log in any day of the week and get access to their portfolios and see what's happening from a transaction standpoint, interest, dividends, buying and selling. If they've got a liquidation request, you know, the service has been, you know, pretty steady, I'd say.
It is sad when we have to restructure our businesses to diminish the human element, the human touch. Because I agree with you, it's great to sit across the table and
it is.
collaborate with people.
I did a client meeting at the office a couple of weeks ago with one of our advisor partners, and, you know, everybody wore the masks and we were sort of doing the elbow bumps, right? But it was important. This family comes in semi-annually at least to review their portfolio, and that's exactly how they wanted.
Yeah.
They want to continue that. So, you know, in fact, it's probably more like quarterly is their usual schedule, and now they've settled for a bit of a hiatus from the spring until now, when we agreed to connect for a face-to-face meeting. But we try to be available as and when, and on the schedule and a medium that is
Yeah, also a lot of clients are just becoming accustomed to Zooming. And,
that's right.
You know, not have to drive into town and pay for parking.
Sure.
Have our meeting on the computer.
Yeah.
As we're doing tonight.
Given what is happening with COVID and the economy and so on, are there some ways that you direct people's portfolios to get away from some of the losers and try and capitalize on some of the winners? I mean, I know you're not into stock picking, but generally speaking, have you seen people adjusting their portfolios?
Thankfully, we had very little in the way of capitulation back when the markets were at their lows. There were, you know, I'd say almost as many people calling me to say, Gavin, what can we do to take advantage of this opportunity? As I had clients calling me to say, Gavin, I'm worried, what are we doing? Which is nice, right? But I think, you know, we've got a lot of mature clients who've seen market cycles come and go, and we were acknowledging, you know, our position about volatility and risk early on in communications with clients. So, you know, I think there was a lot of historical data that was shared, and that probably offered some peace of mind to our clients. But like you said, we're not trend following and, you know, ultra tactical, shifting from one discipline to another because of last month's or quarter's best, you know, biggest winners by any means.
I think the more a client experiences a market correction in a positive way, you know, the more they're they look at these downturns as buying opportunities,
That's right.
which they should.
Yeah, yeah. Like I said, there were just about as many clients calling to say, "Hey, I've got some money under the proverbial mattress that I'd like to allocate." And
So, are you surprised? Like, the market's been quite strong given the implications of COVID.
Sure,
I'm surprised.
sectors of the market, I'd say, have been more than strong, and tech from a lot of what we've seen buoy the markets to levels, new highs, right, that we've reached compared to the pre-COVID days, are a lot of the tech type stocks, right? Like it's the NASDAQ stocks and, things like Apple and Tesla and Amazon and Shopify. Like some of these tech stocks have just gone through the roof, and they're accounting for more and more of the underlying, index. So maybe not surprisingly, but the certain sectors continue to be beaten up and are well below the levels of pre-COVID, and some have just gone, 2, 3, 4x.
It's just surprising with all the uncertainty, but I guess with our low interest rate environment, that helps. I mean, we're in a low interest rate environment for a long time, probably.
I agree. Yeah, I think we are. And the stimulus and all the government spending to prop things up. One of the most alarming parts of our portfolio back in March was what is intended to be the most conservative, which is our investment grade bonds. And I was watching these, blue chip investment grade names going no bid, which caused very short term, but real paper losses over the course of those sort of early weeks in March. Which again, when I'm looking at them and I'm calling the issuers, trying to wrap my head around it, talking with their capital markets desk, like, why are some of these names so badly, beaten up? And it's like, because nobody was buying. It sort of reminded me of the credit crunch back in 2008. Well, the big financial crisis, the Great Recession in 2008, when Bell Canada bonds were going no bid. I'm sure those are similar instances were happening back in March of this year.
We have a question from Tammy. She says, this one would be for you, Gavin. Can you give an example of a portfolio you manage, trying to understand the benefits and what are the possibilities of what you offer?
Sure. So to get into the underlying components of the portfolio, Tammy, would take a little bit more time, but typically what we're looking for from the primarily ETF issuers that we use are a real strong index of dividend growers. So, the ETF or exchange traded fund issuers, and we use ETFs primarily to keep the costs to a minimum when compared to mutual funds. We charge them with the responsibility and review their process and, tracking error, et cetera. They're the ones responsible for administering the underlying bucket. So an example would be our Canadian equity sleeve, which is a ETF from Invesco, ticker's PDC. And if you were to look under the cover or under the hood, so to speak, of that ETF, a lot of those names are very recognizable. It's going to be, Canadian banks, utility companies with very predictable earnings. So, whether it's in Canada or the US or internationally, the names you'd see are companies with predictable, sustainable cash flow, dividend growth, good track record of not just paying dividends, but increasing their dividends. And, the fixed income component is also globally diversified. So we invest not only in Canadian bonds, but in investment grade bonds in the US, as well as, a global bond index. So Tammy, I'd be more than happy to connect with you and show you really what's under the hood, but I'm not in a position today to really dive too deep and show you the underlying constituents just with the setup we've got here tonight.
Of course, we encourage you, if you're watching, you'd like to talk to any of the participants, we'll put up their contact information. I'm sure everyone here would welcome the opportunity. If you have questions, call them directly for further conversation. The webinar is being recorded. Every time we send out an email, we put a link in it to our YouTube channel, so you can watch our past episodes there. And let's bring Harry into the conversation.
Yes.
Harry, thanks for having us over here to the Gibson School.
Well, you're the first event here, actually. We
This is
just
awesome.
moved into the office about an hour ago.
Well,
We're the first ones here. This is a beautiful building, Eric.
It is a cool building.
yeah, it's a great building. And, you know, Harry, one of the reasons I wanted to talk to you, because over my summer holidays, I was thinking about market makers, you know, people who go into an area and they lead the pack. And I know that, you know, you are known as the guy in Toronto who really started something pretty grand in downtown Queen Street West. Toronto Life magazine said that candy factory lofts development was one of the 10 most important things that happened in Toronto's history, which is an amazing
Yeah, they were listed as
statement.
10 moments that changed Toronto.
10 moments that changed Toronto. So you know, you've been here in Hamilton now for a while. You've got a couple of different projects on the go here now. You completed the Stinson School, which is not named after yourself, of course, a coincidence.
Named after Ebenezer Stinson, who
Ebenezer
passed away some 120 years ago.
Right, no relation that you know of.
No, I haven't asked him. I haven't had the opportunity to speak with him.
Okay.
It must have attracted you to the building, though.
Well, yes, actually, what happened with that is that I was just minding my own business in Toronto, and amongst other challenges, and I had a call from an architect here in Hamilton, John McCricky, and he said, you got to come to Hamilton because it needs something like the Candy Factory. The downtown is just, you know, it's sitting there. It's this place that's forever got potential, but nothing's happening here. And we need a masochist like you to come down and do something. And I'll just segue briefly in saying that the pioneering thing, one gets called a visionary in hindsight. But at the time, the general rule is, well, you know, he's not a reasonable person. He's, you know, this is a crazy vision. It won't work, which was the way the Candy Factory was viewed until it worked. And then it was pile-on time. And the whole King, Queen, West explosion was a result directly of the Candy Factory. So John McCricky called and said, you got to come and look at Hamilton. And I did, and I came down and looked at Hamilton. I thought, you know, this is actually pretty cool. It's unlike a Mississauga or, you know, or any of the new suburban entities around Toronto. It was a grand city. It had at one stage the equivalent economy of Toronto. It had the grand old buildings. It had a city core with a fountain and a square and so on. It really had that potential of being sort of a Queen West equivalent. And then the capper was, he said, well, there's a school on Stinson Street in the Stinson neighborhood called the Stinson School, and it was going to come up for sale. And it did. And so we ended up buying it from the Hamilton School Board. And that was the launch of my career in Hamilton. But I will go back to saying that it is a steep hill, pioneering, and a lot of credit, a lot of challenges and credibility of building it, making it happen. We found that with the Gibson School here. It is the equivalent of Queen West, Barton Street East, and it is now turning. That tide is turning here. You can see the coffee shops and you know the Toronto Queen West vibe is coming here because Queen West has become so expensive. You know, and the film industry is here big time. Right now at Beasley Park, which is our other project down the ways, we have this week, we have a film called Clarice, which is a pseudonym for a big film being done by a US producer. We have Handmaid's Tale. We have Titans that have been filming in there. We have Murdoch Mysteries. We have Frankie Drake. We've done over $400,000 in the last 2 years in film rentals.
Wow.
And it's a big business here. And they're populating along Barton Street East because it's got that Queen West vibe without the prices. And so we're seeing a lot of people buying in Hamilton now simply because it's economically viable. You can buy at a price that you can cash flow. And that is not the case in Toronto. I mean, I love Toronto. I came from Toronto. I still go back to Toronto as much as I can, but I don't understand the numbers. I just don't understand why people are buying condos at, you know, $1,200, $1,500, $1,600 a square foot and viewing them as an investment. I mean, to me, it's like, it's just a herd mentality. There are cool sales offices. Everybody else is buying, might as well buy. But I think that's also a function of people's comfort with real estate. It's something they understand, something you can touch and feel and use very much now in this COVID era. People are realizing how important their home is. And if they're working out of their home, they're realizing, my God, this is tiny, you know, there's like a shoebox here. I got to find something more than this. So Hamilton is really picking up even more because of that, because you can buy property here economically. And you cannot buy character like this here in Gibson School or Beasley Parks in Toronto for a price that is insane. Candy Factory units started at 169,000. That same unit is now selling for $1.5 million. It is unreal, the explosion. And you can't find those real loft spaces in Toronto anymore.
What year did you do Candy Factory? Where did they
started in 93, the occupancy was not till 97, 98. But it was a steep, you know, I remember those lonely days in the Candy Factory sales offices with the, you know, the people from the mental hospital in the doorway and the prostitutes trying to solicit business and the drug deals going across the street. People forget that Queen West, less than a generation ago, was a scary place. So Hamilton downtown to me, a scary place? It's not a scary place.
So you see a similar potential? Maybe
Oh,
not,
it's
maybe not to
phenomenal, the
extent.
potential here. You know, coming a few years ago would have been even more phenomenal, but it is still very much on a roll. And I think increasingly so as people really are starting to realize, you know, they're way out of proportion values in Toronto.
Well, you're not the only business that's focusing on Hamilton. I mean, we deal with a lot of private equity issuers that are really focused in Hamilton.
There's a lot more money in Hamilton than sophistication people realize. I'll give the example here of Gibson School. This is a 120-year-old school, and we are converting it into loft apartments. So when we go for financing in Toronto, which has been extremely challenging to convince them of Hamilton, let alone Gibson Street or Barton Street, and we tell them, well, we're renting these out now as rental lofts, high-end Candy Factory type rental lofts. And they say, well, you know, we have experts here and we've done studies and Hamilton rentals, you know, you can get a rental for $600 a month in Hamilton. Well, you can if you like to live in a basement apartment or in, you know, a 1960
room in a basement
apartment. But if you're looking for, you know, good quality character loft rentals, this loft that we're in here, which is a classroom, it's 1,000 square feet corner unit at Gibson School. It has a washroom, it has a kitchen. Otherwise open space, 13-foot ceilings, wood floors, big windows. We're renting these for $2,000 a month. And every one of the $2,000 units here at Gibson is claimed. We haven't finished it yet, but the people have put down money to hold them. So we're now taking the little units where we thought, well, you know, we got to have some 1,250, some 1,300 a month, because, you know, those will rent, but it'll be nice to have some big ones. So we had a balance. We have rented one of the units at $1,250 and all the $2,000 rents.
I know you can't see it on the webinar, but like the ceilings are extremely high here. I mean, this is quite open.
13 feet.
How high are these ceilings?
These are 13-foot ceilings.
That's awesome.
You know, and you know, these were original, but when we came into the school, when I bought the school about 5 years ago, they weren't that high. They were just, you know, the plaster drop ceilings and, you know, with fluorescent lights and everything. So I started ripping things down and we discovered these vast high ceilings, you know, higher. And that's what I've done over the years is take these old buildings that people sort of think, you know, just an old building. And you start stripping it back to its original, you know, structure, the big windows, the wood. And this floor is maple hardwood floor. It's been here since the beginning. It's as solid as you could want on a floor. You could stand the hell out of it.
It adds a lot of character to expose the ceiling
and that's, we took the plaster off the walls to expose all the brick because all the perimeter walls of these rooms are brick and it just glows.
Yeah.
During the day, this southwest corner is just a wonderful space. So these units though over at Beasley Park, we're selling, this one would probably be, you know, $500,000 and we're getting those numbers now. But what's been more interesting, just go back to your discussion about work at home and you know, all the new working environment. I don't share quite that mentality. I think people are sick of working at home and they're realizing that they're psychologically going stir crazy. And the basis of Starbucks was, you know, it's the third place. The first place was your home. The second place was your office. The third place was Starbucks. Well, the second place has been knocked out temporarily. But that second place, people's workspace, their work environment, their co-workers, that environment, that buzz that you mentioned in the office, people miss it. So what we've done at Beasley is we've turned the whole ground floor into that project. And it's a block long. It's 100,000 square foot ground floor into a complex like a work village of little individual off units or office units for 39,000. So a person for the less than the cost of a BMW low end can buy their own office and permanently be in this area. So we have like 100 of these little offices. You know, you've got your front desk, 24-hour concierge, the bar, the gym, everything's all included. And you own the thing for, you know, $400 a month. And they have been selling like hotcakes. And they'll rent out for $500. It's not a bad investment, you know?
So I know we want to talk about like a little more in depth into the Hamilton marketplace. Like what makes Hamilton better than Burlington or any other town that's an hour outside of Toronto? You know,
I don't know that it's better, but its prices are better. And people in Oakville and Burlington and Mississauga, you know, not just Toronto, they sell the house, you're going to buy a condo, put some money in the bank, retire. Then they look at a condo in Oakville and decide and discover, sell the house, buy the condo, and there's no money in the bank. It's pretty damn expensive to live there. And the buildings are non-character buildings. They're cookie cutter. They're not as appealing. Hamilton has the character buildings.
And I guess the transportation links have improved over the years too.
They're getting there. But, you know, from here or from Beasley, you can walk to the GO station. You know, and whether you're, whichever suburb you are, you're an hour downtown.
So how often does the GO train?
I actually take the bus usually because the express bus is just zoom, zoom right in downtown, no stops. The train is about an hour and 15. The express bus is 50 minutes. But you know, the thing about Hamilton that people are noticing is not a lot of people in Hamilton commute to Toronto. They work here. They live here. They're in the film industry, healthcare, education, technology. It's actually a very good local economy. They work outside of Toronto. The downtown Toronto person is probably still a downtown Toronto person. Right. That's a hard shift. If you're a suburban Toronto person, you know, Hamilton actually has an economy. You don't have that same economy in Whitby and Barrie and so on that you have in Hamilton. And there's a critical mass of people having moved here now, so you start to know more people, you know?
So self-sustaining.
It's becoming self-sustaining, and it is, and you know, it's a lot closer to the border, but Hamilton does have a city core. You know, you can see concert here at Cops Coliseum, or as they call it, the First Ontario now, you know, that you'll see in Toronto. And a lot of the major acts will come through Hamilton because it costs them a fraction to put on a concert here, and they get the same audience and charge the same ticket price as they would in Toronto. Scotiabank said it would cost them multi-millions to put the concert on.
I remember seeing Paul McCartney in this town, actually. It was a memorable evening.
There's some great concerts
Paul
here.
McCartney will come to Hamilton.
But they do. I saw a concert a few years ago with Elton John here, and it was the most.
That concert too.
We went at the last minute and got tickets. The last call tickets, actually, if you want to go to a concert and get best tickets, show up the very few hours before the concert. Because I've been in the concert business. What's happened is they've set up the stage. They've got the sound towers in place. That sort of fan beside the stage, they won't release till they know where all the sound towers are. And so we got the tickets right beside the stage. So we were like 20 feet away from Elton John.
Wow.
It was an amazing concert. Anyways, it actually has a community, and that's what makes it different.
That's probably an important reason why Hamilton is.
And the major Toronto developers are now here. Great Gulf is here. Tridel bid on the way to waterfront project. You know, I see a lot of name brands. Brad is here now with Television City, 2 40-story towers. Major developers are in. The whole quality of the residential downtown infrastructure and density is exploded.
So how do you convince somebody when they don't come to Hamilton often, but they do come into Hamilton on the east end like I did, and pass by all these steel.
Oh, that's what they should actually. Someone from Hamilton and Caledonia should blow up the Burlington Bridge, the Skyway, or put a detour, have trucks dump gravel accidentally, so people have to come on the 403.
Right.
And when you get there, you say downtown Hamilton, which is a 403 exit, and come in around Coots Paradise, around that whole beautiful area, the greenery, the harbor. It's a whole different. Wow, this is Hamilton. Because you're coming around into the city itself, where if you go across the bridge and see the industrial waterfront, where there's very little still happening, you have the different view of Hamilton. You have to come in through the downtown entrance.
Now, what about on the hill? There's there's the east side of Hamilton, the west side of Hamilton.
Oh, the mountain?
And then there's the mountain.
Well, bring somebody in from British Columbia and say, that's Hamilton Mountain. They're going to say, I don't quite see the mountain.
Hamilton Hill.
It's a little hill. Well, there's some magnificent housing in Hamilton because, as I said, once upon a time, Hamilton was a very wealthy economy, equivalent to Toronto's. So if you go into Durand, for example, or along the edge of the mountain, there are areas of Hamilton, Dundas, beautiful grand stone homes. There's a real difference in there. The downtown area is coming along, but there are pockets like the Stinson neighborhood. These were grand old Victorian homes. I bought 3 houses across the street from the school, and we renovated. I paid $2.25 for them. We sold them each for $750 after renovations. Those house prices would not have been seen, when we bought them 10 years ago. But it really is evolving. It has a community, it has an environment, but again, it's the numbers. That's what's brought
growing.
here.
Population
It's growing.
is increasing every year, I would assume.
There's about 1 million people in the Hamilton-Burlington sort of circle. And then you add Dundas and Ancaster. I mean, really, you come from Toronto and drive to Niagara Falls, there's not a lot in between. It's
Right.
one golden horseshoe.
Right.
And then you could go into Buffalo and stay at our hotel.
Yeah, speaking of the hotel.
You
I
wanna-
do want to ask Harry a question about the hotel, just one
Okay.
question.
One question, and then we'll.
I'm just
move on
wondering
maybe.
if, because I know we see what our Canadian government is doing to try to help business through this crisis. Are you finding the US government responsive, helping a guy like you in Buffalo?
They have different programs, but we have actually seen more help from the US government than from the Canadian government.
Good.
They don't have the same advertising on TV saying we're here for you,
Right,
but they work.
they are there for you. Yeah.
It is it's tonight's the debate night, so everybody should watch the debate afterwards, but the US politics are crazy, but there's far more sort of proactive action. There's a lot of talk here. I mean, we've been endlessly filing things to the Canadian government websites for the small business loans, which are, would cover like 1/3 of our monthly mortgage payments if we got them. And you just keep filing and,
Well, I know we're here to talk about Hamilton, but I just do want to say I've been to your hotel many times. It's a gorgeous building. I hope you can survive the COVID hit and, get that building on track.
we're surviving.
It's a beautiful building.
The occupancy is slowly rising. But what it has done, it has actually cleared the slate of the bookings we had, which is a bad thing on one hand. On the other hand, now it's completely clean. I can in terms of events happening, we're completely gutting out the event space and putting in an 8,000 person event hall. So it will become a destination.
8,000.
Well, it's 42,000 square feet, the main room.
Wow, that's big.
So we're turning it into a destination event center
Wow.
with a concert club, a comedy club. I mean, and 2/3 of the building is going to be in residential condos.
Wow.
So it's allowed that pause to do that work. It's a painful pause, but you look at it a year from now, the metamorphosis will be astonishing. But it certainly hasn't been fun in between.
I have just a question, one more question for Harry, and then we're going to bring Mark Loeffler and Felix Vortsman into the conversation. You mentioned the large developers are here.
Yes.
In Hamilton. Is there any land left, or are they redeveloping buildings?
Yeah.
What are
Not
they
as
doing
much
here?
as you'd think.
Mhm.
Those deals, people come into Hamilton looking for the steal of a deal, you're a little late. But you compare it to Toronto, there's a lot of good value here. And now you can sell units in a new project, improved project. We did Stinson School, I was struggling to get $200 a square foot. Now we're at $500 and $600 a foot on Beasley Park. Now it's viable. Now we can build here. And you're going to see more and more. There's a massive waterfront development that Great Gulf is doing right on the harbor. And that will change the image of Hamilton. And they've already started doing the infrastructure and the roads in there. When you see that development on the harbor of Hamilton, instead of just the steel mills, the Gothic sort of steel mills, you see the development that is going to have an enormous impact on Hamilton, on the image and on the values.
Okay, well, Harry, we wish you much success to complete all of your projects as quickly as
Well, I'm stubborn.
possible. And we would love to see that happen. Let's bring Felix into the conversation. We have both Felix Vortsman and Mark Loeffler from their homes. Most likely they're in remote locations. Felix is a CPA. He's the founder and chief millionaire maker at cloud9life.ca, and he's a sales representative and investor and coach at Rockstar Real Estate. Felix, welcome to the show. How you doing tonight?
I'm doing well. Thank you for having me, David.
Excellent, excellent. Great to have you. Felix, I know you're very active in markets outside of Toronto, like Hamilton and others. What have your observations been like in the last few months over COVID? During COVID, are the markets picking up? Are they slowing down? What do you see happening in Hamilton?
Well, Hamilton, just like pretty much all of the outlying municipalities across the greater Golden Horseshoe, are extremely hot markets right now. We're dealing with very limited supply of listings on the market, and at the same time, much higher demand, especially with people who are looking to get out of that 500 square foot box in the sky as a result of COVID-19 isolation requirements. Where people were stuck in 500 square foot boxes, all the things within the urban centers that they loved were closed down. And we're seeing a lot of demand basically, into these outlying municipalities where people can literally buy, let's say, a fully detached house for the price of what they could buy a 500 square foot condo in Toronto. Combine that with very limited supply of inventory on the market, it has created literally the perfect storm for multiple offer situations all across the board. Several and obviously prices spiking all across the board, not just in Hamilton, but in places like Barrie, Niagara region, Durham region, and the like, and even in Cottage Country as well. During COVID-19, the market I liken this market very similar to what happened just before the Liberals' Fair Housing Plan of 2017. That's how crazy the market has gotten. Prices are spiking all across the board, which is great for people who already own properties, not so hot for people who are looking for properties. Certainly places like Hamilton are very high in demand at the present time, simply because people get the land that they require, backyard space, outdoor space, and at a much lower price than they'd have to pay in Toronto. In a city that basically provides pretty much everything that Toronto offers in a lot of respects. An urban environment, great outdoor spaces. There's a ton of waterfalls in Hamilton. I think it has more waterfalls than any other city in North America, from my understanding. And then you combine that with a lot of job opportunities coming to town, with some of the latest being Amazon creating about 1,500 jobs in about 855,000 square foot facility near the airport. A lot of high tech is moving into the region, a lot of film industry, a lot of health and sciences that has been expanding for the last several decades. And the city is really basically coming into its own and really reinventing itself from the steel town that it has, been known to be for several decades.
I know that, Felix, part of your investment strategy is to find good cash flowing properties. And in Toronto, it's harder to find cash flowing properties, although the prices over the years have gone up a lot in Toronto. So, I mean, why do you feel cash flow is more important? And are you not really looking at all in Toronto for investment opportunities for your clients? Is it all outside of Toronto now for you?
I basically take my clients where I invest in personally. I have not invested in the GTA for the past decade. Indeed, I've actually started investing in Hamilton about 10 years ago and continue to do so, as well as several other regions outside of the GTA, but still within the commuting distance of the GTA. Cash flow, in my opinion, is basically your insurance policy. Effectively, regardless of what happens to the market, as long as you can generate cash flow from your real estate investments, even if the market corrects itself, you're still collecting basically the coupon on your investment. You can wait it out. You can weather any storm. That's basically key to my investment thesis within any of the municipalities that I deal with. I find Toronto to be more of a speculative market. The reason why Airbnbs have become so popular in Toronto is because it really came down to nobody being able to cash flow the traditional way anymore, where you actually have to do something like an Airbnb or a short-term rental in order to generate some sort of cash flow from that end. So Toronto in and of itself is more of a speculative market, in my opinion. If you're doing flipping properties, Toronto is great. But if the market turns tomorrow, be prepared to potentially be caught with your pants down, similar to what happened in the US during the financial crisis as well. So as long as people understand the risks involved with investing in a city like Toronto, great. But there are much better opportunities elsewhere in cities just outside, but within commuting distance of Toronto, where you can generate some cash flow, hence your insurance policy, and you effectively, indirectly participate in the Toronto market as a result as well, because the Toronto market is driving these other submarkets accordingly. And they're, given the fact that they're within commuting distance, given the fact that they're increasing public transit from each one of these municipalities. Hamilton is a great example. Within the last 6 years alone, within a 6-year period, Hamilton has created 2 new GO stations. So one is basically the Harbor West that was opened up during the Pan Am Games. And a new one is coming online in 2021 near Centennial and the QEW, across the street from the Home Depot there, called Confederation. So, and on top of that, they're expanding service, GO service going into the GTA as well. The other thing that's great about Hamilton in general is not only is it very enticing for people who work in Toronto, the commuters to and from Toronto, but it's also enticing for people who are living in other sub-markets such as Niagara region. So Hamilton is actually a pretty large city. It's a major city in Canada. Most people don't seem to realize it. Everybody concentrates in Montreal, Toronto, Vancouver. But if you're looking from a population perspective, Hamilton is actually one of the top 10 biggest cities in Canada in all likelihood. And it has great employment opportunities. And as a result of that, people from all the other outlying municipalities, whether it be Toronto, whether it be Niagara region, tend to gravitate to Hamilton as well. So it's a great market overall to contend with. However, to your point with respect to cash flow, it is becoming much more challenging to achieve in places like Hamilton. I remember when I started investing in Hamilton 10 years ago, you could have bought yourself a fully detached house, turnkey, literally picked up the keys, rented out to a tenant the next day or the very same day. Now you can still achieve cash flow within Hamilton with these type of investments, but now you're going to have to roll up your sleeves and actually do some renovations. Whether those involve basically some renos and then basically rent out, or more likely than not, what's becoming really popular is people taking single family homes and converting them into multi-units within the city. So that's becoming much more popular, and you literally have to do some work in order to generate that positive cash flow at 20% down.
Felix, Gerry, you got a question?
Yeah, I got a question,
Go
Felix.
ahead.
I think we all here agree that the substantial growth that we've seen over the years, not only in Hamilton, Toronto, all the areas within an hour or 2 hour of the GTA, has largely been fueled by immigration policies. We've had a lot of immigration. I'm assuming we will continue to have that, but COVID, may affect that. Any thoughts on that? Do you see if the immigration is reduced, that will adversely affect markets like Hamilton or surrounding?
So immigration is very important to the country of Canada in general, not just Toronto. If you're looking at where the economy is well diversified, which areas of the country where the economy is well diversified, where the jobs are basically in this country, especially in today's day and age. So Alberta obviously is like the polar opposite of southwestern Ontario right now. We're in a sweet spot within the country of Canada. We have a very diversified industry base, a lot of service-based industries, high tech. We're in a phenomenal place to be in. Now, with COVID-19, you're absolutely correct. There is a pause on immigration right now. Once the pandemic subsides, I suspect that that faucet, that tap will be turned on right back up again. The fact of the matter is, we require immigration. We're in a declining population society, just like most Western world countries are, and we depend on immigration to maintain our economy and to grow our economy. And the type of immigration that we attract into this country tends to have some of the best skills in the world. We're a great destination for international students because of our great education system. And we will continue to, and if you look at the rest of the world, take a look at the US, take a look at some of the other Western world countries. If you have to give it some soul searching, which one of those countries do you really want to be in, other than Canada, right? With everything that's going on right now. So I suspect that immigration will keep on chugging along. This is just a very temporary pause on the whole situation as a result of the pandemic.
I tend to agree with you. I mean, if you look at the amount of money that the federal government has borrowed since COVID, and our national debt now is over $1 trillion, which is unbelievable. I mean, we need economic impact to deal with that debt, and thus there's a need to continue to bring in immigrants to produce that economic output that is required. So I would think we're pretty safe in assuming that our immigration policies will continue and will have a positive effect on not only Toronto, but all these surrounding areas within in my opinion, the 2-hour radius. I've always said the 2-hour radius outside of Toronto is a very strong marketplace to buy, to invest in multi-unit residential opportunities. So let's hope that continues. I'm sure it will.
I highly agree with that. And anecdotally speaking, I mean, there's actually a company, I forgot the name of it, they're actually putting on billboards in Silicon Valley in Northern California to attract a lot of these international workers, some of the best in the world, into Canada. The reason being is because of their immigration stance in the US as it stands right now. A lot of these individuals, their visas are about to expire, and they want to continue working in a Western environment without the pitfalls involved with working in the US. And they're actually trying to attract people to come to Canada, even during the COVID-19 times, and successfully actually doing so.
Felix, you touched on Airbnb a little bit earlier, and Harry whispered that he believes it's illegal now.
Well, the regulations have come out, and a lot of condominiums, I'm on a few condominium boards, are passing bylaws now saying you can't rent short-term Airbnb style. And there's been a new bylaw in Toronto that requires you to register and run it more like a business. And
that's if you're in a condo.
No, in a house.
Even in
Airbnb in general. Okay. And it is not so easy to do. So actually, vacancies in Toronto are rising now because a lot of the Airbnb people have just given up, and the condo boards are shutting them down and not allowing them. So in Stinson School, we've just instituted a bylaw there too. You cannot do it. In Beasley Park, it's totally prohibited. You have to do it through a central management system because it's caused a lot of problems in houses and in condos. Mm-hmm. So the Airbnb, as the gentleman's pointed out here, the Airbnb concept is not so simple anymore. And so that's actually made it even more difficult to justify buying this 500 square foot unit for the cost of, a home in a perimeter.
And that's been for a few years now.
Yeah, it was a short-term, wonderful formula, but it's a lot more work and it's a lot less of a given. You can't just multiply the nightly rental times 30
Right.
and figure, oh, hey, I'm a genius.
Yeah.
Doesn't work anymore,
Right.
Doesn't work like that.
especially if nobody's traveling.
Felix, you were gonna,
Yes, oddly enough, the whole short-term rental market tends to be a tale of two cities. As Gerry rightly mentioned, Toronto is negatively impacted with the current rules that just recently came into place within the city of Toronto. But as a result of those rules and as a result of COVID-19, oddly enough, just personally speaking, we run about 4 short-term rental units ourselves. They just do not happen to be in the GTA. And I happen to be in a municipality where those rules don't apply. It all really comes down to vetting out the opportunities out there to see where those specific types of strategies can work. Oddly enough, we've actually done extremely well during the COVID-19 times, mainly because people from Toronto, they want to take staycations because just out of necessity, they couldn't go anywhere else really during the summertime. And we tended to be beneficiaries of that. All of our short-term rentals are located in Niagara region. And as a result of that, we're getting a huge amount of demand. We had a huge amount of demand last year, a bit less this year, but we're doing phenomenally well versus somebody who may have an Airbnb in Toronto. So it's almost like a tale of two cities, but it really comes down to figuring out which municipalities you can exercise these strategies in, which ones to avoid, and really getting educated with respect to what can or cannot be done.
yeah, and as long as the municipality doesn't change their policy midstream, because that could really throw off your business case. But anyway, let's bring Mark Loeffler into the conversation. Welcome, Mark. Mark is a real estate sales representative with Keller Williams Signature Team. He's a team leader, I should say, 20 years experience investing in real estate, author of Investing in Rent-to-Own Property, and he's also been producing these great videos lately. So, Mark, welcome to our podcast, and tell us, what have you been up to lately? What are your thoughts about Hamilton and COVID's impact on it?
All right. What have I been up to lately? Well, 3 videos a week on YouTube. Buying apartment buildings in Hamilton. Helping other people buy apartment buildings in Hamilton. What's the impact of COVID? I mean, I put an offer in on a property at the end of February. So during due diligence, we were in, obviously, COVID happened and we got a bit of a COVID deal. We probably got 7% reduced price. We got a little bit different financing because financing kind of fell apart at that point. And we got the deal done. We got a bit of a deal. And now it looks like, we're all geniuses because everything's come back to normal and come back pretty strong.
Right, it's come back strong. So why do you like apartment buildings as opposed to single family? I mean, what's your sweet spot?
Personally, I like 20 units plus. I prefer to be buying 30 or 40 units. It's just hard. Like some of the REITs come down to that size, so I don't want to compete with them because I don't have endless buckets of money, just a couple buckets, so not endless. So,
Poor Mark.
I'm not Harry Stinson yet. I'm not buying hotels. No, I mean, so why do I like apartments? Why do I like commercial? 100% it's for financing. I can go ahead and the more units I have, the more the bank likes me. Whereas if I'm buying single family homes, typically you get so many and then the bank says, oh, you're a liability, even though you have so many properties rented and so many units rented. And I just don't want to go through the hassle of putting like 10 in this corporation and 10 in this and finding other joint venture partners. Me and my joint venture partner, we own 50-50 in a corp. We both go on title. We both get a mortgage it's simple, it's easy, I like it. Plus, obviously, if I save $1 in an apartment building, my value goes up. If I raise income $1, my property value goes up. It's not, it is tied to the market a bit. You know, with interest rates so low, cap rates are compressed, which increases my value. Yet, at the end of the day, I have a lot of control over what I can do to the building and raise those values.
Okay, and why Hamilton? I mean, is Hamilton the only area where you're buying?
I mean, I do look in other areas 100%. I just haven't bought anything for a long time in any place other than Hamilton, because every time I seem to be finding a deal somewhere else, something just really good pops up in Hamilton and it takes my attention away. But I've looked in St. Catharines and Brantford, Oshawa, along the 401 corridor. You know, I mean, I have a decent portfolio of about 200 units now, and to get to that size, I don't think you can be as narrow-minded as just looking at one municipality. I mean, at this point, though, I obviously have just in Hamilton right now. But obviously, if I want to get some of these bigger units, I am looking outside of that.
You talked about, you touched on an important point. When you get to 5 units and above, the banks look at you different, right? They look more at your portfolio and what the potential is of the property. Have you gotten into the CMHC insured mortgage product? You know, where they say they'll give you 85% loan to value and rates are supposed to be around 2% interest rates. Does that fly?
Well, obviously you haven't looked at those lately because somebody just quoted me 1.2 to 1.4% on a 5-year. I can get from a bank right now 2.4 on 2-year from BMO. I have not done it yet. They're a pain to get. They take a long time. Typically, I mean, I'll get 70% of the actual value, which is probably fine. I just haven't got to the point in any of my buildings where I've got the rents up enough or I've done enough work to them where I want to lock in for that long and pay all the fees and do all that stuff. Although, to be honest with you, I have 3 buildings coming up in November and I am exploring CMHC financing right now because, I mean, let's be honest, if I can get 1.2, 1.3% financing, I mean, I'm kind of an idiot not to lock that in for 5 years, right?
Well, it certainly is tempting. My understanding is it takes like 3 months to get approved, so you better get cracking on that one. Harry?
I was just going to say, you know, Mark's a very sophisticated investor. But just as a cautionary note, lenders have gotten very skittish in the last several months. So just assuming that funding is there, you got to be really careful about it and prepare for a plan B and a plan C.
Oh, I have that. Harry, I got that all covered. But here's the thing. The other thing is,
you do. I'm just saying in general for the purpose of the podcast.
Yeah, and the other thing you got to recognize is we're in the same game but different. They look at residential apartments as the safest investment.
Agreed.
They look at the safest lending. So I could walk down to any of the credit unions and get 65% just like that. Here's my appraisal. You know, yeah, I mean, and I'm fine even if I get the same financing I have, right? Like it's not, none of this is a big deal. Obviously we want to take some equity out to either go build something or buy something else or renovate or, you know, buy a boat. I don't know.
Hey, Mark.
Oh, I can't say that for CMHC. If you guys are any with CMHC, that's not, we're not going to do that.
We can cut that. Mark, for the benefit of our listeners, where you take us through a typical, like, where do you find your deals? How do you, you know, take our listeners through a scenario where, you know, are you reaching out to the owner? Are you a real estate broker, so you're on the inside?
So the answer is yes. Best deal I ever got was on MLS.
Wow.
It came up on Toronto MLS, 22 units. I think it was the last building that ever sold in Hamilton for less than 100,000 a unit. It came on at 6:30 in the morning. I had my offer in by 7. they countered it by 8:30, and by 9 o'clock there was like 15 offers, all sight unseen on this building, but I had the counter already in my possession. I could have flipped that contract for $500,000 in an hour or well, in a day. So that was the best building I ever bought. It was on MLS. So when people say you can't find stuff on MLS, it's not true. A lot of times though, it does come from connections. It comes from other realtors who know that I either am a buyer or number two, that I represent people who buy, and they say, hey, Mark, who do you have for something like this? We know that you'll bring a fair price and you guys will complete on the deal. And then obviously I call and network with the owners.
Isn't there like an apartment owners association in Hamilton where?
Yeah, the HDAA, Hamilton District Apartment Owners Association. So I was a member there for quite a while. I didn't renew last year, and I was part of their, like, one of their committees, public relations or something. I just haven't, I kind of fell off the face of the earth a little bit, took a little time off, and I guess
Well, that's
I'm back
not,
now.
so is that a good source to connect with all the owners, or is?
Yeah, 100%. I mean, it's good to, it's a good place to connect with the owners. It's, you know, a lot of old guys there that probably should be selling at some point. So
Isn't that
Let
the
them
case?
off the hook on this one, okay?
Well, most of these apartments are owned by older people. They've had them forever, and they're
Well,
aged, and they want to cash
well,
out.
Harry, these guys built these things in the 60s. They weren't young then.
Yeah.
And now, you know, this is their retirement. They're in their 70s, in their 80s. And I think they just hold on to them so they
Yep.
can get away from their wife for 4 to 6 hours every day.
That's true. I mean,
Right.
they got no mortgage.
I would,
Oh, they got no mortgage. And here's the thing, like, they're grossly rented. Like, you talk about a $900 apartment. That guy will list it for $900. He'll get his 70, 80-year-old person in, because that's what they want, because they're no hassle. They always pay their rent, and they don't care about getting premium rents. They don't care about upgrading the unit. They just
Sure.
want a good, steady thing and no hassle. They want to go putter at the building, and that's it.
so Mark, just out of curiosity, given the fact that the interest rates are coming down, what are you seeing in the cap rates as far as financing is concerned within these properties? Are they getting even more compressed than they were pre-pandemic levels, especially with the lower
So-
interest rates?
Are you saying what's it costing us to buy it, or what they're financing at? What's
Costing it to buy it, basically. Price
so? I mean, yeah, we just did a deal at just over 200 a unit. That's like pretty normal now. That was at like a 2.4 cap, which is unreal. Yet here's the thing: we're not buying for today's cap rate, right? We're buying because, you know, they get rents of $1,100 right now, and we can re-rent those units for over $2,000. So we have lots of opportunity to lift that to a 7.5 cap based on our purchase price and rental costs. But I mean, that was the tightest I've seen. I've been buying in the last 2 years in the 3/4 to 3.75 range, in the 20 to 30 units. And obviously that's, you know, cost of business is going up. I mean, yeah.
I remember seeing these apartment buildings in Hamilton going for about a 5-6% cap rate, not even 5 years ago, basically. It's just incredible how much the market, the cap rates have compressed in that environment, and they're not in the GTA even, right?
Right.
So, which
Yeah.
is incredible.
I mean, I used to sell buildings at $30,000 to $40,000 a unit, and I thought that was expensive. I mean, I run into an old guy every once in a while, and I used to sell to him, and he goes, Mark, do you remember when I used to come down to Hamilton? We'd check out 5 apartment buildings, 3 would work numbers wise, and we'd decide which one we should buy. I said, yeah. And he goes, who knew? We should have just bought all of them.
Yep.
Coulda, woulda, shoulda, yeah.
Yeah, you live, you learn.
Absolutely.
Well, that's kind of my mantra today, right? Is I know I'm overpaying today, yet in 5 years I'll look like a genius.
There's a mantra in real estate. The best time to buy real estate was 10 years ago, and the second best time is right now.
That's right.
And as far as apartment buildings are concerned, I mean, they're phenomenal. I mean, you get the leverage off of them as well. Again, given that leverage, you can basically, increase your cap rate simply by decreasing your costs or increasing your revenue. But you're right, it doesn't happen overnight. You got to have deeper pockets. It's certainly not for the novice investor out there, but it is definitely a transitional point.
Well, and I tell all new investors, I go, the quickest way to make money in investing is taking a Hamilton Mountain bungalow, turning it into a legal duplex, renting it out, you cash flow, you refinance it, you pull out, most of your money, if not all of it, probably not all of it now. You could like 2 years ago. Now it's obviously tighter. Then your next progression is to buy a 2.5, 3-story downtown. You turn that from 1 to 3 units. And now you're pulling out all your money plus some, and you're cash flowing pretty well. And then, and these things you can do in 6 months to a year and get all your money out. Whereas I tell my investors, our goal is to have your money back within 4 years. So we want to refinance that property and have all the construction costs and down payment and everything back within 4 years. So that's always been our goal.
For sure. And I've been specializing in the multi-unit conversions for single family homes into 2 and 3 units. So definitely that has become extremely popular. I mean, like I started doing rent to owns in Hamilton about 10 years ago and transitioned into the whole single family to multi-unit conversions. The great news about the city, I don't know if anybody knows yet, they put out to public comments, what they're trying to do right now is actually streamline a lot of the bylaws concerning a lot of these conversion projects, because most people don't know, but Hamilton is an amalgamated city, similar to how Toronto is an amalgamated city. However, as they were amalgamating, they were keeping the city-specific bylaws, the legacy bylaws in place. And as a result, the rules concerning a lot of these conversions in, let's say, a Stony Creek would differ from the city of Hamilton proper. So what they're trying to do is actually streamline that now to make it easier to increase the levels of affordable housing, which is a great.
So I'm just going to say, yes, they have been talking about that for a while. I used to be on the CMHC roundtable for affordable housing in Hamilton. And that was 4 years, 3-4 years ago. I don't remember. Anyways, it was a while ago. And that was one of the things we had brought forward like 3-4 every year that I went. We said, hey, you have to do this. And they said, okay, yes, we're going to do that. We're going to do the commercial first, and then we're going to get to the residential. So I wouldn't hold my breath that that's going to happen anytime in the near future. That's all I'm going to say.
Now, the word streamlining in Hamilton has a whole different definition.
Although, Harry, Harry, I don't think you've ever tried to do business in St. Catharines. Like, they take what Hamilton does and take it to the next level.
Oh,
So,
I have stories there.
like, it's unreal. Like, Hamilton is open for business compared to St. Catharines.
Oh, dear.
Felix, what is your phone number, please?
416-617-2559.
Just want to mention, we're going to wrap up at exactly 7 minutes. We don't want to overlap with the presidential debate. We normally finish at 9. If people have questions, they can type their questions. I've put down everybody's phone number so that if any of the viewers want to get a hold of any of the panelists, they can do so. Gerry, I want to ask you about incorporation. We're going to remind people about the
when we're done, we can,
the thing. Okay.
I mean, I can say now. I mean, once again, I mentioned it earlier, but I think Wednesday, is it October 14th? We're doing a session for real estate agents about the rules that are coming up for real estate agents to be able to incorporate their earnings. So join us on that night. Again, Wednesday, October 14th, 7:30.
Wednesday night, Zoom. So message either one of us if you want the Zoom link, or call me, text, either way, we'll get that to you. The number that I put up there, for me is my cell. You can text me at that number and we'll make sure you get the link if you want to attend that session. Well, it's been very informative. Why don't we just go around, see if anybody has any final thoughts? Gavin, we haven't really asked you about the Hamilton market. I know that you're not your area of expertise per se, but your office is here in Hamilton.
It is. Both my partners are Hamilton guys at Huxton Black, and we toyed with the idea of establishing a footprint in Toronto and being one of thousands of wealth management or finance shops, and each of us commuting east into Toronto. I live in Burlington, and it just didn't make any sense. We loved the vibe here in Hamilton. It is very urban and, you know, metropolitan. You know, I began investing in Hamilton probably in 2013, not too long after I met Mark. In fact, I was a member of the Real Estate Investment Network, and
Mark Loeffler.
that's right, yeah,
Right.
Mark Loeffler. So he and I go back to those early 2010 days.
Old
So,
days, yeah.
yeah, that's right. When you were doing the seminars in the Holiday Inn at Guelph Line, the investor seminars and whatnot. So yeah, forgive me for not really hammering any points home about Hamilton during my earlier points, but
Well, we didn't really
I am
ask you about that, so that's
I am a
cool.
big
Yeah.
fan of the city.
That's great. Well, we appreciate you being here on the show. And again, if you're watching and you want to learn more about Huxton Black, call myself or call Gavin, especially if you want to learn about portfolio management. Give Gavin a call on that. Harry, last words.
Well, just has been said, and Hamilton is at a tipping point now. And all I would say to people is just come down and look at it. I know it's really a long way from Toronto, even if it's not, but people seem to be, hesitant. Come down into the city itself, into the downtown core of Hamilton, and you do see an actual city feeling to it. There's a community here, and it's going to be one of those situations like Queen West is, I was going to, I should, I was thinking of it, I just, something came up. It's still possible to make some pretty good investments here.
Sure.
Excellent. Great suggestion, Harry. And thanks for having us here.
And we are building a model of our
School.
lofts at Beasley Park, so I'd encourage come down and take a look at that.
Excellent. Felix, last words on Hamilton.
Hamilton remains a great city to invest in. Obviously, a lot of the cherry picking has disappeared, so you do need to put a bit more sweat equity in it. But opportunities still exist for those seeking, willing to look for them. It is a very progressive city, has a lot of good things going for it. Recent laneway housing allowability, for example, being one of them. So I think the government, although it has been slow at times, is making headway with respect to both, they get it with respect to both the developers and the need for the provision of more affordable housing. And they're making more headway on it, more so than ever they have ever done so in the past.
Okay, well, thanks very much, Felix, and we appreciate you being with us today. Mark Loeffler, final thoughts. Hamilton, apartment building investing.
You know what? I got tons. If you guys want more info on any of it and you want to stay at your computer, you want to travel, go to my YouTube channel. I've done numbers on a bunch of apartment buildings that we've either just bought, that we're renovating, that we've just refinanced. If you do take Harry's suggestion and you go visit him down in his new sales center, head on down the street to my new restaurant opening down there, Caro 2. You got to go check it out.
Where is it?
So I have three. Caro 2. It's on James Street North. Crap, they just painted the building white. I should know the address, but I don't. And then, so there's two. There's one at 2 Ottawa Street North. And then we have Victoria's restaurant at King and Lock.
So you just
So if you
opened a couple of restaurants, Mark?
We opened Victoria's Steakhouse just before COVID. We were open 3 weeks and then we were closed for 120 days.
Ouch.
Bad timing. Aged beef. Anyway, all right. Well, we wish you a lot of we wish you a lot of success, and thanks for being part of the podcast tonight. Gerry,
Yes,
what do
sir.
you think? Was
Yeah,
our
no,
venture into
yeah,
Hamilton,
I think
real
our
estate
little-
market, everything was cracked up to be? What are your thoughts?
Trip to Hamilton has been great. I want to thank Harry for hosting us here, and
You're welcome for coming.
We had a nice little visit downtown and checked it out, and Harry's right. It's a nice city feel down there. And so it was a great trip to Hamilton. Look forward to our next visit.
It was a great trip. Next month, probably in Wasaga Beach area.
Yes,
Right?
let's go to
Collingwood,
the beach.
Wasaga Beach, next month. We appreciate all of you for tuning in. Don't hesitate to reach out to any of the individual participants if you have specific questions. We will post this on our YouTube. And thanks again to all the panelists and to all of you for watching. Until next time, enjoy the Trump debate coming up in 30 seconds. Good night, everybody.
Good night.
Good night, guys.
Good night.
Bye.